Okay, reviewing our chapters for the test. Let's get started. The purpose of insurance is to protect against a financial loss. For all kinds of insurance, for all things that are going on, it's protecting against a financial loss. Risk management is trying to avoid, reduce, assume, or shift risk to insurance companies to self-insure. The test does have a question on an example of what would be uh, like an avoidance, know what an avoidance is, what would be reducing, what would be assuming, and have a practical idea in your head of how to shift. Insurance companies, of course, is just having them insure it, and then of course if you self-insure, then you're doing that. So just kind of have some ideas in your head of what avoid, induce, and assume are. Um, Premium is the fee that we pay for protection. What kind of insurance is needed? We have homeowners, auto, disability, health, and life. Homeowners, even though you're kind of a healthy person, you visit the doctor 3 times a year. What kind of insurance reduces your expenses? Would it be homeowners? Nope. Auto? Nope. Disability? No. Health? Yes. Okay. What's the next kind? You're married and you're worried about your spouse could afford something to live if something would happen to you. What type of insurance would protect your spouse if you were to pass away? Well, key there is you pass away, so we're looking at life. Not homeowners, not auto, not disability, life. Next one. You're a car owner. Keyword. You're worried because it's been an increase in car break-ins. What type of insurance would help you repair your car? Homeowners might, but probably not if it happened in your driveway. Auto, yes. Disability, no. And the other two we've taken care of. You live in a very dry area that has forest fires or a risk of it. What type of insurance can help you repair your house and reduce and replace your valuables if they were damaged in this situation? Well, we're down to disability and homeowners. Homeowners. So by default, you probably know what the last one is. You were in a skiing accident and can't work for a few months. What type of insurance would make sure you still receive an income? Disability insurance does that. And again, it pays it about 70% of your income, 70, 80%, depending on what it is. Homeowners insurance has property and liability coverage. Renters insurance covers your belongings and liability, but not the building or anything to do with the building. Umbrella policies, we talked about those. Those give you extra liability protection. And household inventory gives you proof of value. So take an inventory of your house, your apartment, photograph it, list it, however you want to do it, and catalog it. And that way, if there's a loss, you know exactly what you're looking for. Okay, for homeowners, they have replacement value or actual cash value. Replacement is if you lose something and have to go out and buy it, whatever it costs today, they will pay. Actual cash value takes whatever you paid for it, less depreciation. Um, and then you get a check for that difference to go out and buy what's new today. So if you can afford it, replacement value is better because you don't know when you're going to have a loss. And like our house is quite old and we have some antiques. First of all, that would be, either worth a whole lot or worth nothing because they're old. But then you have, couches and chairs we've had forever. I mean, they would to try and go buy a new one would be a whole lot more expensive. So if you can afford replacement value, it's the better way to go. But actual cash value does save you money, but it just gives you a depreciated value of what it was. Deductibles are what we pay out of pocket. Usually you have a deductible and then the balance is paid by the insurance company or a portion of that up to the stop loss if it's health insurance. But deductibles are what reduce the claim payment. So we have to pay those out of pocket. Personal property floaters, if you have something that's more expensive than what the coverage is on your policy, you may have camera equipment, stereo equipment, jewelry. You can get it what they call a floater that gives coverage for that specific item up to the amount that you have so that you're sure that if something happened and you have a huge stereo you've paid thousands for, you could go out and get that replaced. Auto insurance. Why do you need auto insurance? I don't. Now, I'm not promoting any kind of insurance. If you could not see that, I never know if it will record or play when it's on this kind of a recording. If you can't see it, look at it in your outline. It's one of my favorite commercials. I'm not promoting the insurance company at all, but it just kind of gives you the old, life happens, and you need to be sure you have something to cover it because we don't always predict. We can't always predict what happens. So with auto insurance, liability, it covers others' injuries and it covers property. Collision covers damage to your car. Comprehensive covers theft, fire, hail, and things that may happen that are not a collision. Medical payments are covered for injuries in your vehicle. Health insurance was the next topic we had. Well, here's to good health, and if you can't have that, then here's to good health insurance, which is a very true statement. Health insurance has basics. Why do we need it? And then don't forget COBRA. The basics of health insurance, just to understand what those are. The basics are that we have rising costs, technology, aging populations. We have duplication of services or what contribute to the rising cost. Group plans. Um, we can have group plans are usually more affordable. They do offer coordination of benefits so you don't profit from a loss. Basic coverage. You want to make sure you have that covering hospital, surgical, and physician expense minimum. Stop loss provision caps what your out of pocket expenses are. So we talked about that with deductibles. Then you paid like 20% of claims up to whatever your stop loss is. And then from that point on, the insurance company pays 100%. Um, there's a video here for health insurance to kind of explain it better with the terms than I could. We also talked about that there are government programs for health insurance. There's Medicare. They have Part A and Part B. Part A is medical. Part A is hospital. I'm sorry. Part B is medical. There are other parts of C and D and all that, but the basics of Medicare and how it started was Part A and Part B, hospital and medical. There's Medicaid for low income, state administered. They get federal guidelines. They may even get some federal funding, but it is state administered. So while it's a government plan, it is for everyone across the nation, but each state administers their own. There's disability income insurance if you're unable to work. There's another video here that's not working, and so if you'll go to the PowerPoint, you can you can listen and watch the video on disability insurance. That'll work. There are a couple of videos that I think messed up on this recording. If you'll just go to the PowerPoint, you can click on them and watch them. They are in YouTube. It's a real easy connection, so I apologize for the trouble. We talked about life insurance has a purpose. It provides financial security for dependents. It's used for income replacement for your income, your spouse's income, a partial income. You may use it for debt repayment. You may use it for education funding. Um, it's also you can use a couple of ways to calculate it. You can use needs based. You can use an easy calculation. We talked about that. The double income, no kids, where um, technically you could just reduce, um, have your insurance pay half of the mortgage, pay half of the bills that are outstanding because your spouse would still be working and you don't have children to provide for, or the human value life methods. And those were all discussed. You can find those out. Also, know on life insurance, if you do fun and exciting things, they may have an extra rider on that. Term is defined as temporary, low cost. Whole life is permanent for your whole life and has a cash value. Universal life has flexible premiums and has an investment option. Credit life is what you get at the bank if you are getting a loan. It pays your debt if you should die. And also remember that you can usually get that cheaper on your own. So, beneficiary designation, who you want that to pay to. Again, if you're using it for a loan or a mortgage, you want it to pay first to the bank and then to your beneficiaries, but name spouses, friends, kids, whatever. There's an incontestability clause that after 2 years, the insurance company, if faults are found with the insurance policy or with information that was given, that they can no longer do anything about it. Suicide clause also falls under that incontestability clause period of 2 years. Settlement, they can pay it out in a lump sum, in installments, in a trust. Here's another video you can watch. I don't know if that one will work, but I'll forward through it and see if we can get to it. Then you can watch it on your own. So to wrap up, insurance is a protection. It's not technically an investment. Try to understand the coverages, the limits, the deductibles. Um, Match your insurance to your needs. Don't just get a generic or because your buddy next door got whatever, think you have to have it too. Make sure it matches your needs because then it's not eh, the price you're paying for the coverage makes you feel better if you know it's what you need. This test is 50 questions, multiple choice, true, false. It's open actually for 3 days. It says for the full day schedule, for the full time scheduled. It's in Respondus lockdown. We had some issues with Honor Lock, and so I've got it in Respondus. The key for it, the code is in the instructions, and it is open note. You can just show your work at the end, like always. If you have any questions, of course, give me a holler. Thanks.